The #1 news station within the world. My name is Romeo Busuk, and of course, I come to you yet again with another pertinent conversation, largely focusing on how best this country can boost or leverage on collective investment schemes to boost personal incomes right here in the country. We're talking about the Capital Markets Authority that has overseen the growth of the sector. We're talking about 1.15 trillion Uganda shillings and assets under management, according to the latest coming in from the Capital Markets Authority. That is a whooping 1.15 trillion Uganda shillings in, yes, savings. They've already hit the NDP3 targets for the year 2024 to 2025, 3 years earlier. And that's why we are here to blow the trumpet, to also leverage the, collective investment schemes and see how best our people right here in Uganda can boost personal incomes in that regard. In the financial year 2020-2021, the assets under management were only worth 562.7 billion Uganda shillings. So we are talking about an increase of over 102%. Yes. And during that same period, 2020 to 2021, we were only talking about some 14,000 investor accounts that were operated by the 5 collective investment scheme managers within this country. But now we are talking about a whopping 32,998 investor accounts in that regard. So that is it. 1.15 trillion has been, yes, amassed according to the latest coming in from the Capital Markets Authority as far as the CIS managers are concerned. Even the National Social Security Fund is here with us to talk about the benefits that can accrue when people actually save more. NSSF assets under its management are worth 16.6 trillion Uganda shillings. That's nearly a whopping 17 trillion Uganda shillings. So here we are to talk about how best we can leverage the collective investment schemes to boost personal incomes within Uganda. I do have that is Miss Miriam Mulira Echirapa. She is the Director Legal and Board Affairs at the Capital Markets Authority. She's going to be talking to us about these issues and a lot more. She's not alone. We also do have Simon Kusima Mwebaze. He is the General Manager of UAP Old Mutual Financial Services. On the other side of the NSSF, we are glad to be joined by Apollo Mbowa Chibirango. He is the Customer Financial Advisor working with the National Social Security Fund. Gentlemen and ladies, thank you for joining us on NTV Uganda.
Thank you.
All right, let me start with the lady. That is Miss Miriam Echirapa Mulira. She is the Musali. She is the Director of Legal and Board Affairs at the Capital Markets Authority. Let's kick off with the factors that precipitated the growth we are seeing right now. When I move on to the streets of Kampala, people are telling me, Romeo, the skyrocketing food and fuel prices are really biting. So what factors really are precipitating the growth we are seeing and the news we are hearing from the Capital Markets Authority that over 1.15 trillion Uganda shillings has been amassed in savings? They can't really see the growth factors in that regard, but you've been on the ground, you've been doing the research, and here we are. Would like to know what are the factors behind the growth over to 1.15 trillion Uganda shillings. Let us in on that.
Yeah, we have to thank our players, and I'm very happy Mr. Mwebaza is here. Indeed. He's one of our players from UAP. Growing a market is not something that you can do individually as a regulatory agency. And so the Capital Markets Authority has been very intent on working with the people that are actually doing the business.
I see.
And we have also been very intent on educating the masses on the opportunities that collective investment schemes bring. So a lot of campaigns have gone out on radio, on television, telling people that instead of putting your money in the bank and being charged,
I see.
you should put it in a scheme and get returns. So the key message has been very clear, and we want to thank Ugandans who are beginning to respond to that message. And we also want to thank the government for the reform of the pension sector.
I see.
You see, with growth in the pension sector, we are able to have even pension funds themselves put some of those funds in collective investment schemes. So we are seeing that this is really a collaborative effort. We also have an investor resource person program where we actually have persons who have been trained by the authority to educate investors. And that has really contributed massively to this growth that we are seeing in CIS.
So you're only talking about awareness raising as one of the factors that have precipitated this growth.
As a very key factor. And of course, the reform of the pension sector itself is a big factor. The tax incentives that come with the CIS is also a big factor. So all this combined from a policy perspective, an awareness perspective, and the fact that now we have operators who for as low as 100,000 will open a CIS account for you. So no one can say, oh, I get so little money, I can't invest in a CIS. Yes, you can. You can.
Indeed, and I was also hearing that if you have a bank account, you can also have a CIS account onto that. How does that work?
So it's not exclusive because to open a CIS account, you actually also have to have a bank account, okay? And this money is sent to a custodian, okay? So this money is not being kept by Simon. He hasn't brought it to the...
The trust to the bank.
Yes. So having a bank account is still important. It's just that your money is being deposited in a custodial bank, which is then invested by an asset manager. And then you're able to get returns from it. So you can see from a governance perspective, CIS has a very good and unique governance structure.
So you cannot come up with a CIS account minus having a bank account, but you could have a bank account and not open up a CIS account. So it's really imperative that if you have a bank account, also open up a CIS account.
Yes,
I see.
That is true.
Also, when it comes to the growth factors that precipitated, you know, all this development that we are seeing within the collective investment schemes, I was speaking to Simon Kusima Mwebasi, the general manager of UAP Old Mutual Financial Services, before this conversation, and he was telling me in 2020, that's when we started to see all this growth, you know, being precipitated within Uganda, largely because of the COVID-19 pandemic. So when the people were distressed, they started saving. Let us in on that, Mr. Mwebasi.
Yeah, I mean, like Miriam has said, there was a lot of effort that had been put in, especially around financial literacy. But there had to be an event that would prove what we've been talking about all these years. And that was the pandemic. So a number of homesteads and families, and even generally as a country, people were exposed. You saw companies were laying off staff, trying to scale down operations because of the strict lockdowns and all. So people's usual sustenance was kind of cut. And now for those who hadn't prepared, they were really exposed. However, quite a number of them then decided to, you know what, let's start taking these things seriously. And because there's really evidence of clear-cut hardship.
Indeed.
Now, with continuous engagements like Miriam has said, then now it became actually very easy to get a conversion rate. However, I still think that this is still early days. There is still a lot of potential, much potential beyond what you can even imagine as to the ability that we can be able to achieve through the CIS industry.
As one of the 5 collective investment scheme managers within Uganda, what are some of the challenges you've encountered along the way as you've been working with these investors? The 32,998 challenges.
There have been a number of challenges, but the way we've looked at it is, yes, there are challenges, but also it's a point of reflection. The biggest has been financial literacy.
I see. And
the advantage is we have very strong partners on board. The Capital Markets Authority, you can imagine an industry, I mean a regulator that empowers the industry so much so that on their own even they're able to go out there and do a lot of this, financial literacy. But also there has been a bit of friction around things like transaction costs. You can imagine for us to be able to see some strong exponential growth, then things like technology have to come in play. And till now we still have a bit of high transaction costs, like mobile transaction costs and all. So that, in my opinion, is one of the greatest challenges.
But I thought that was one of the benefits of working with the CIS manager, that the transaction cost would go down. Yeah. Individually, as Romy Busiku, if I were to trade in, securities, government bonds, and treasury bills, it would be so expensive because I could be having little money. Yeah. But you, as a CIS manager, you have this whole pool of money, and when you are trading, you're using, billions and trillions of shillings. So that means the operational costs are going to be low. Am I right?
You're 100% on the money. Yeah, the operation costs are definitely low, but I'm meaning the ease at which an investor can be able to enter within the CIS ecosystem.
I see.
So, for example, you still find fairly high transaction charges on mobile money. So, and yet this is supposed to be like an enabler. I mean, if, for example, those transaction costs are just notched down a little bit, the multiplier effect would be enormous. You'd find a lot of these investors and maybe at the mass level finding it easier to transact and even throw as much money to the CISs as possible. Of course, there's been a lot of progress that has been done around technology, and the transaction costs are not what they used to be about 5 years ago, but there's still a lot more that can be done to bring that down, at more and more. So if we can just get crazy on the financial literacy, and then we make the doing business so as easy as possible, then you can imagine how far the industry can go.
That is Mr. Simon Mwebaze-Kusima, the General Manager for UAP Old Mutual Financial Services. We are talking about how best to leverage collective investment schemes within Uganda to boost personal incomes. We are not only with UAP Old Mutual or CMA. We also do have a representative of the National Social Security Fund, that is Apollo Mbowa Chibirango, the Customer Financial Advisor. Apollo, let's talk about one issue. The fact that you do have over 1.15 trillion Uganda shillings with the CIS managers, but then you do have 17 trillion, a whopping 16.67 trillion Uganda shillings with the National Social Security Fund. And before we came here to start deliberating on this conversation, you told me that you were highly disappointed, telling me that it shouldn't be 1.15, it should be more than that. If the Capital Markets Authority and the Collective Investment Scheme managers were to tap into the customer base or the savers with the National Social Security Fund, we'll be talking about how much? 10 trillion or so? So does that mean the awareness raising has not gone to the right direction or targeted the right people who are the savers with the NSSF?
Without pointing fingers, we can't. They have done what they have done, and indeed it's good, it's commendable work. But the challenge is now on my NSSF members. Actually, now not just my NSSF members. When you talk about NSSF, you're talking about national. You're talking about 40 million Ugandans.
Indeed.
At NSSF, we are also fighting, having a book of about 1.1 million members. And your national fund, that's quite little. So who's taking care of all the other 37 million members?
Indeed.
They are members of this country, and they
some are keeping their money behind the bed and so forth. Then, so it's not bringing back returns.
Exactly. But then to focus to the challenge now, because we need baby steps.
Yes.
Let us take out one thing at a time. So NSSF, Romeo, you send 5% of your money.
Yes, Mr. Mbowa.
That leaves you with 95% of your money.
Indeed.
Then the taxman takes away 30 or 40%. That leaves you with about 65 or 55% of your money.
Indeed.
That's what you are left with in the pocket. 98% of my members, their only savings is with NSSF. But they have 55% of their money. And of course, it will come up and they will tell you there's so much you need to do, there's so much, there is rent, there is everything. But the money at NSSF is also not that sufficient to take them through retirement. So as NSSF, we feel our members should have options. As Romeo, you my member, I can only call you, I can only say you on your journey to wealth if you have options. Not only if you have NSSF, if you have 100 million, 200 million with NSSF, you are still not in the line of the wealthy.
Indeed.
You need to have options. So I have about 1.1 million members on my book. The CSI accounts, CIS accounts are 32,000.
Indeed.
About almost 1.1 million of my members have not visited this site. Yet, NSSF members, just to generally speaking, are the privileged in the country. So where are their options? I feel like if they also dedicate another 5% into a unit trust, that's a parking space. That's where you can put your money, accumulate your money. Then if you are going to say you're going into farming, you do not start by taking that 10,000. Take that 10,000 to a unit trust. When you open up with 100,000, some unit trusts actually allow as little as 10,000. So for me, 1.1 trillion is actually a very good number given the times. However, the challenge is, why can't we have it almost half? Because then we can say every NSSF member has an option with this, and this money they can easily access. Just imagine COVID, when it hit, because people didn't have options. The first option was, give me at least some of my NSSF money. If they had something on the side here, that would be their answer, and it would be instant. NSSF, it took a whole 2 years until recently. Just to add on to that, we pay out about 70 billion on a monthly, on average. This is members' money. Now, when you say NSSF is 17 trillion, this is about 16.6 trillion. This is not NSSF's money. This is members' money.
For the savers.
It's their money. Because they came together, they are able to come up with that amount of money.
And you told me it should be more than that. It should be more than what we are seeing on the paper, 16.6, because of the numbers.
I have about 14 million people working, where the other about 12 million who is saving for their retirement.
Only 624,000
Only
active.
624,000 are active. The other number is dormant of the people in the book. So there is quite a lot of opportunity. Now, as we celebrate this milestone, it also brings in a opportunity, but I'm challenging my members, I'm challenging the CSI, I'm challenging the authority, and we have very good working relationships. He's talking about financial literacy. We're doing that with them, we're doing it with the CMA. I'm challenging them that we need to up this number. Now, as I finish this, because if I start talking, I will not finish. Let's talk about that person. This we are not doing for the nation. This we are doing. This should be done for you. Now,
for the
I need
individual.
to get into that space and ask yourself, 1.1 trillion is in the CIS. How much of it is my money? When we start this conversation and you tune into this television and you are listening, what of it are you contributing to this? Because this money is not just seated there. Every day, it is making money. People are quick to rush into business, into a side hustle, yet they're not even delivering at their workplace. And they fail to deliver the workplace, fail to deliver the side hustle, yet they have an option which can make you accumulate money while you are delivering at your workplace. So I need to have that conversation with you, the individual. You need to have this conversation with you that, yes, these guys are discussing trillions, but what of that money? What of it is mine?
Ms. Miriam, there is a pool of money at the NSSF. How best do we tap into it? We're talking about some 1.14 members, of which 624,000 plus are active. How do we tap into these individuals and make sure that they are also saving with us, with the CIS managers?
Yeah, it's a very good question, and mine is really an appeal.
Right.
We have people who are getting this thing called midterm access.
Indeed.
Some of them are even lining up with Apollo right now.
420 billion.
Now, if you ask some of those people what they did with their money, it's gone for some of them.
The survey is coming out. You will see the numbers.
We want to see the numbers. Now, if you get your money from NSSF and you don't have a proper plan, first put it in a CIS. Get some returns. Don't get the money, put it on the bank account. Already you're getting charges on that money. I mean, that's the first smart decision. So if you're getting midterm access, put your money in the CIS. If you're retiring, there are people who are retiring and they are in a more fortunate position. Maybe they've got a short-term contract. They don't really need to take all that money out of the fund or to take it and put it elsewhere. They should be able to look and say, okay, I've got this short-term contract, I have this money, let me get maybe some of it, put some in a CIS and manage, because these are professional investors regulated by the CMA who understand how to make your money grow. How to accumulate it. So it starts from that individual making a smart choice. The other thing, of course, is the initiatives that Apollo has spoken about. We are working very closely with the NSSF to educate members today, not tomorrow.
Indeed.
If you're already in the fund and you're being educated on a CIS, you can decide to even automate and say, every month let 100 go to the CIS. You don't have to earn a lot of money to save in a CIS. With that little money you're getting as an assistant, as an intern, start that habit of investing in a CIS as a member of NSSF today.
Indeed. Now, the beauty of this is that you only have to, save your money with, the corporate, that is the collective investment scheme managers who are going to be giving you financial advice on how best to invest that money. You don't have to move a muscle. Yes, if you are busy Monday to Sunday, you can continue with your work, knowing that there is one collective investment scheme manager that is going to be taking care of your money. And that brings us to the regulatory and policy framework that is always conducive for such, investment schemes to take center stage. Capital markets all over the world have been able to develop because of the policy and regulatory framework. So here in Uganda, what are we dealing with, Ms. Mulira?
Musali. Miss Musali.
Go ahead.
So in Uganda, one of the things we've done that I am very happy about is to reform the existing framework.
Indeed.
Our collective investment scheme framework, which has worked well, was put in place in 2003. 2003. And it was based on the UK model. So we have come together with market players like Simon to review that framework together, to say how can we make this better for the CIS operators, for the investor, for the regulator who provides oversight. So the Capital Markets Authority is in that process. We've had stakeholder consultations. Our board has reviewed what we've done. And so we are going to see that the framework is even going to make it easier and better from an accountability and transparency perspective. So that's what we've done. The other thing that we are doing right now is we are engaging with the Ministry of Finance on some more incentives for CIS. That is very, very critical. We have some tax incentives that are now for the fund itself, for the body corporate itself. But we need tax incentives for the individual. Okay? So right now we still have a withholding tax that's being applied because of the definition of a company in the Income Tax Act. And so we are engaging and we are saying, can we have more incentives? You want people to save, but let's also incentivize that saving. So that from a policy perspective, that's something we are pushing for, and we are going to work with the Ministry of Finance on it to see that that incentive comes through.
Indeed.
Yes.
Well, the more stronger the policy and regulatory framework is, the more confidence that people will have in the system and to save more, knowing that their money is well protected. Well, let's also bring in Simon Mwebaze-Kusima, the General Manager for UAP, Old Mutual Financial Services. Let's talk about the kind of assets you are investing in as one of the CIS managers within this country. When you get my money and some of my colleagues pulled together, what do you invest in?
Yeah, so we're actually investing all of this money in financial instruments, and most of these financial instruments are actually within the region, especially in Uganda. So if you see the typical balance sheets of unit trust funds, you'll find that a good portion, over 70%, is actually more than 90% is invested in interest-bearing assets, and in particular government bonds and treasury bills. So as far as relevance to the national economy is concerned, you see that CIS is a part and parcel. And to pick on what Mariam has said around the incentives and the policy discussions, if this CIS industry is crafted well, and I believe right now it is, and it's even going to get better, we can actually attract even international flows. Think of money coming in even from institutional investors globally. Right now, Uganda's investment case, generally speaking, when I look at it across the region, is very good, and it's even getting better. The oil and gas is opening up.
Indeed.
The president the other day mentioned how we have a lot of gold that is marketable, and then even the agriculture. So when you look at the outlook or the future of the country, it's actually just getting brighter and brighter. So the CIS can even be leveraged to be a catalyst to crystallize all that, such that you find even cost of borrowing has gone down because we're actually going to be giving some of this money, and we are doing it, fixing it in banks. So as the CIS industry grows, you are going to see a very, very strong relevance, let me say, to the Ugandan economy generally, as a result of the investments that the CIS is undertaking. Yeah.
So we did talk about lowering of transaction costs as one of the advantages or benefits that come with working with a collective investment scheme manager. What other benefits come with working with CIS managers?
I think first and foremost, it's really the professionalism.
I see.
Because you can imagine having to follow markets and things like that. You have,
and information is not readily available.
Information is not, and even if it were, probably it's not what you're really interested in.
And you don't have time.
You don't have time. You have other things that you'd rather be reading than inflation and trying to position and see how you can. So behind the CIS managers are very, very interesting brains that have the ability to make very good investment decisions that will protect you. And beyond protecting you, get you some good income, such that, generally speaking, all you have to now worry about is, how to make sure that you're budgeting and you're allocating money. So it's just that peace of mind, that professionalism, knowing that behind all this is actually an investment manager whose job is to just wake up every day to make sure that you get richer.
Indeed.
So when you look at that, I think for me that's the most paramount benefit.
Talk about the diversification of risk. I believe that is so important for the viewer who is watching as one of the benefits of working with the CIS manager. You're going to invest this money into various, entities and not just one that Romeo would be looking at, because you do have very, very many options that you're looking at. So let's break down what it means, the risk of diversification of risk. Yeah. What does it mean?
Yeah, so diversification of risk, you're looking at risk of loss. Given the event that probably an event that like maybe you've invested somewhere and there's a loss. Now normally, and that's where part of the professionalism comes in. If you're to invest on your own, you've heard of all these pyramid schemes.
Indeed.
I mean, there have been so many examples over the years how every year or every 2 years there's another gimmick that comes up to take money from Ugandans. You're going to avoid that risk by coming through a CIS. But even beyond that, sometimes we've seen previously Ugandans having a bit of herding effect. I think in the mid-2000s, that time people were doing vanilla and stuff like that. So you find that everyone goes and allocates capital into a certain area, and because everyone is doing it, probably even the returns depress. But now through the CIS, you're able to get that diversification across different sectors, but also across your own personal portfolio. So you have some money in land, you have some money in the NSF generating for you a return. But then you need to be able to disassociate from any potential risks that could come as a result of any of those hitting terrible headwinds. So you will find that the CIS then brings that element. But even beyond that, the CIS has regional diversification, because you will find that in some of these funds, there's exposure to regions outside of Uganda, to which you could easily benefit from as an investor. Yeah.
What are the most popular collective schemes, collective investment schemes within Uganda here that many of our people clamor for?
Yeah, so I think there are mainly two. The most popular ones are the interest-bearing funds, because right now it's we're at that stage where everyone who wants to invest wants to know what is the return
there goes the turn.
that I'm getting beyond anything else. So you'll find that most investors are putting money in money market funds or interest-bearing funds, precisely because of it's easier to tell from the onset how much one could easily get. But as the investor gets more sophisticated and has greater risk tolerance and appetite, you would find them going into security funds or balanced allocation funds, which have allocation to even non-interest bearing assets such as shares on the stock exchange, to mention but a few.
All right, that is Simon Weber-Zekusima, the General Manager for UAP Old Mutual Financial Services. The topic for this conversation is mainly focusing on leveraging the benefits of collective investment schemes to boost personal incomes of our individuals right here within Uganda. We're talking about some 32,998 investor accounts that are accounting for over 1.15 trillion Ugandan shillings. And on the other side of the NSSF, we're talking about some 624,000 active members who are accounting for 16.6 trillion Uganda shillings. Of course, Mr. Apollo Mboa was telling me there are some over 500,000 members who are dormant. So you do have some 1.1 million members with the NSSF. So the members within the NSSF can actually tap into the benefits that come with, you know, opening up a CIS account with the Capital Markets Authority and be able to, you know, diversify the risk in that regard so that their savings are actually well protected and they're getting returns on those same savings. Let's bring in Apollo Mboa Chivirango, the Customer Financial Advisor with the National Social Security Fund. Apollo.
Yes, sir.
Talk to me about the national budget reading, 48 trillion Uganda shillings. Was there anything in particular that Matia Kasaija did mention that caught your attention as far as savings mobilization is concerned moving forward?
Wow, thank you. When it comes to national issues, I want to look at these two people.
Yeah.
But let me take a peek at this. And again, when you go to the theme today, it's trying to see how this impacts personal. So
yes.
This budget reading was done yesterday. 48 trillion.
Indeed.
That's the nation sitting down and planning. There is emphasis on parish development model. They are trying to bring the money down to you. But I want to leave, and the gentleman, the lady here will expound more.
How will that money come back to the NSSF from the PDM?
Let me come to that.
Yes.
Because as NSSF, we are at a point where we are saying, yes, we are fulfilling our mandate. Our mandate is go pick money from people, from the employers, keep it for them, don't give it to them when they are not eligible, pay it to them when they're eligible under the 7 benefits. And we have done that quite well. We are scoring quite well. However, if I give you back your money and it doesn't help you, which has shown us that 80% of our members within 2 years they have nothing to show of their money they have picked from NSSF. As NSSF, I'm not being of purpose to you. So this budget happened, and I want us to come to that same place of how is it of purpose to you. And I want you to go down to you as an individual. The nation sits down. It is a whole process of 9 months to come up with a budget. You as a person, how are you going to benefit from this budget? You can look through all the fine print, but I want you to bring it back to that person. Start with your own self, budgeting for your own money. Let me tell you, all these things you've been talking about, wealth is nothing to do with money. It's all about habits. When they read this national budget, you will hear priority areas, that the priority areas are trying to enforce certain habits, certain learnings, certain ways of, as a nation, we need to posture ourselves. But bring it down to the person. Can you also have today budget reading with yourself? Evaluate yourself, where you've come from, where you are going, what you're bringing in, what your debt structures are. And this doesn't have to be done at Kololo. Sit down in your dining table, go in your wardrobe, go in your bedroom, and list down these things. Because as NSSF, we believe you do not lose money when we pay it to you. You have been losing it all your life, all your life.
Yes,
it's just that now you are losing a bigger chunk, and it is evident. But every time you are paid 23rd, and on 24th you don't have money, you have lost money. You are left with 55%, and you will start quarreling about it, how it's so little, I can't save on this. If you can't save on the 55%, you will never save on the 1 billion that you receive from NSSF. So you've asked me about the national budget, but I want to bring it down to the person. I'm saying, as the national budget is being read, and you're going to take quite a lot, some time and some good airtime discussing it. But I mean, I don't know if, yes, we need to, and we have
the national budget is going back to the layman or the common person through the parish development model, and we are targeting the farmer. So how best can we make sure that when this money goes down into the economy and to this individual, somehow it comes back to the NSSF? Because many of these people are in the informal sector, if you would agree, and the NSSF before was targeting people in the formal sector. So indeed, it's a chance for us to target the majority who are going to be actually getting some kind of money. How are you ready for this, huge wave?
I want to bring you back to, because we might miss the point. We might think that NSSF is trying to gain out of this budget. Actually, NSSF has changed the whole orientation of how we were looking at things. First, we are saying, empower the individual, the money will come to NSSF, because they will understand the purpose you have in their lives. They will contribute to NSSF. They will contribute for their children. They're coming up with
but do you
good
believe
products.
the PDM will grow the number of savers with the NSSF?
I don't want to give opinions on that, and but I believe that if money is coming down under PDM, as an individual, you have an opportunity in there. This money is going to come to the parish. Not everyone will benefit. And it's not because you'll be disadvantaged, but it's because, and as NSSF, we believe you lack action. As this is being done, what actions are you going to take towards this? For you to make sure that you are relevant, you are actually going to be harvesting from these funds. Because yes, it can be dished out. Money that is dished out, you can also just dish it out. It will never find its way back into the system. So our appeal is, as individuals, you need to ready yourselves. You need to be people of action. We believe the acronym ACT is for action changes things. The only reason why things are not changing in so many lives is because people are not actually acting. So, as NSSF, our belief is each of our member, even that person who is not our member, has a linkage to our member. So I cannot, as NSSF, just look at my members in isolation, try to bring them up. Because my member is a neighbor to a non-member. And my member will not sleep if the neighbor is hungry. So our approach is, can we, as a nation, rally behind action? Action at a personal level. Action, let's start with the budgeting. If there is a PDM model in the budget, is there a PDM model in your house? How is money getting to your children? Start thinking in those terms, and then bring it back. These other things, Ministry of Finance has over what? 200 people, technical people looking at all these things. My discussion may not add that much, but actually to just find an opportunity, and then I bring it, localize it to myself as a person, and harvesting the right habits, because wealth is about habits. Let me just finish with this. While we are discussing, we told these guys, we were discussing with these guys here, the value of 1 minute. When we entered the studio, we had to be in by 10.
Indeed.
Very many Ugandans, you tell them be somewhere at 10, and they will come after 30 minutes. Is there anyone? Has it started? But if we are not here at 10, we would have missed it.
Indeed, sir.
If you understand the value of that 1 minute, that each 1 minute you spend, that it's not going to come back. You can't manage it. You can't manage time. Time is not for managing. You can only manage yourself over time. And if you fail to manage yourself over time, you have no business managing money.
Indeed. That is Apollo Mboa Chibirango. He is the Customer Financial Advisor working for the National Socio-Security Fund. We also do have Ms. Mariam Echirapa Musali. Yes, she is the Director, Legal and Board Affairs at the Capital Markets Authority. Ms. Musali, let's talk about what did catch your eye when it comes to the budget reading. Uganda is on the precipice of a new financial year as of June 31st, 1st of July. We shall be talking about the new financial year 2022-2023, a whopping 48 trillion Uganda shillings. This money is going to trickle into the economy. Some individuals are going to, get a hand of this money. And let's talk about what chances there are for us to leverage on the chances of this money being saved with the collective investment schemes.
It's interesting that one of the things that came out from the budget that I thought was quite good was the business support.
I see.
A lot of companies are looking for capital.
Indeed.
They are looking for capital. So I like the fact that Uganda Development Bank is going to be essential in helping businesses recover from the effects of the pandemic. But the question is, after you have recovered, where are you going to raise the money from?
Indeed.
You're going to raise it from capital markets.
Indeed.
Now, the capital markets is very keen about corporate bonds. When a business thinks of raising capital, which bank should I go to? They don't think that there is someone out there who has a lot of money that they want to lend that money to a business for a return. That's basically what a corporate bond is, that you can issue a financial instrument as a company, borrow from the public, pay it back at an interest, okay? So when we look at the cost of borrowing, we need to see the capital markets as a good channel for those businesses that are going to recover. Because how long is government going to help us to get back? Once you're back on your feet as a result of the injection and as a result of government intervention, we want to make sure that you come to us, come to the right place. The other one, of course, is the individuals who are going to benefit from the parish model, the households that are going to benefit from the 100 million. You have to have a plan.
Yes.
You, as a parish, you need to be sitting down. Capital Markets Authority educates the public. We don't charge you for educating because we are paid by the government. You need to ask us to come to you, and when we come to you, we come with experts from the CIS, okay? Come as a parish and tell us, this is what we are looking at when we get 100 million. Immediately you get that money. Don't just give it to the treasurer.
Indeed. I see.
Invest it first.
You can
Let
grow.
it bring a return for you before you begin being innovative with business ideas. Okay? So I really hope that people will prepare, people will plan, and people will utilize the channels that Capital Markets Authority is giving you from an education point of view. And whenever we do public education, we carry the experts with us at our cost.
Let's enlighten them on what capital markets are, Ms. Miriam. What are capital markets?
No, you see, that's a very important question.
Indeed.
It's a very important question. Capital markets are markets that bring those who have money to lend with those who do not have. So the capital markets, it's like going to a market like Owino Market. There are people who are selling clothes, isn't it? And there's the one who has come to buy. In capital markets, we have companies that are raising capital for their businesses, okay? And they are selling shares. And then we have you, the investor, who has gone to Owino to buy the clothes, okay? You're buying those shares. So those are the stock markets. So in the capital markets, we have different types of instruments. The ones we are talking about now are the financial instruments. We have treasury bills and bonds, which are governed right now by the central bank, which is Bank of Uganda. And you can buy bonds and things like that. Then we have corporate bonds, which are regulated by capital markets. And then we have the stock markets. Now in Uganda, we have two exchanges. We have the Uganda Securities Exchange and the Alltex Exchange. Those are exchanges where there's trading, the buying and selling of shares. So you just think about it just like you would an ordinary market. But now we are talking about financial instruments. Yes.
All right, that is Ms. Miriam Ichirapa Musali. She is the Director of Legal and Board Affairs at the Capital Markets Authority. Let's also bring in Simon, Mwebaze Kusima, the General Manager for UAP Old Mutual Financial Services. Anything that caught your eye in the budget reading yesterday as far as saving mobilizations are concerned, Simon?
Yeah, I actually want to concur with my two colleagues here. I think the parish development model and now, so previously in the previous planning period, it was just an introduction, and I think even the amount of resources that was allocated was fairly low. But now that amount has been increased, and there is an intentionality to it. So I think to pick from what Miriam has said, ours is to just now say, how do we tag along that and say, can we come in and give this financial literacy such that there is a greater use and accountability even of the funds. The other thing that, like Miriam has said, the issue of recapitalizing the UDB, even UDC, and many of these other funds that are directly connecting with the individuals on the ground, it is really critical. And now what we are actually trying to scratch our heads about is how do we piggyback on this and say, can we come in and do financial literacy? So that there is again preparedness for some of these businesses to not only take on these funds that are going to come through, but they're able to even utilize them and see scale growing up. So that eventually they can now come onto what Miriam has just said, come onto the corporate bonds, and come onto the securities exchange, raise either capital or even sell shares. And then at that point you start seeing the work of capitalism, all these things that we're trying to put together. Generally speaking, that's what caught my eye as far as saving mobilization is concerned. But on the flip side of, on the other side of it is also how is government going to do this?
Indeed.
They are going to borrow about 5 trillion domestically, and I would want to imagine that a good chunk of that will be raised through the CISs.
Indeed.
As part of the subscriptions to these government bonds, treasury bills, and any other structures that government may be looking at.
Of course, we are breaking down the huge milestone that has been, accrued by the Capital Markets Authority, 1.15 trillion Uganda shillings. That is the amount that has been accrued under assets under management by the 5 collective investment scheme managers within Uganda. In 2020-2021, we're talking about only 567 billion Uganda shillings. So this is an increase of over 102%. And in the same period, we were talking about only 14,000 investor accounts, but guess what? We're talking about nearly double. That is around 32,998 investor accounts. Do you know how much we would achieve if we had more investors actually opening up accounts with the collective investment schemes? It would be a whopping 10 to 20 trillion Uganda shillings, if you will. So in tandem, we are going to be comparing how we are performing as far as collective investment schemes are concerned with our neighbors here, Kenya, and far away. We shall look at Ghana, which has over 750,000 collective investment those are collective investment scheme accounts. Yes, let me bring in Simon. How best can we grow the sector to actually match up with these economies like Kenya and Ghana? What could be done to develop collective investment schemes within Uganda?
Yeah, thank you. I think it's just really to turbocharge some of the efforts that we are doing in terms of continued financial literacy. The challenge with financial literacy, and why we're really appreciative of CMA supporting this together with the NSSF, is you don't see an immediate benefit, like instant. Like you go to all these places around the country and engage with investors or potential investors, and you may not see a turnaround there and then. And sometimes typical companies wouldn't want to do so much of that because you have to invest capital to see an immediate turnaround. However, with partners like CMA and National Social Security Fund, we're able to see a lot of this financial literacy going out there. And that is, I believe, going to, if we can just extra turbocharge it, you're going to see a lot of convergence. One thing that really gives me a lot of optimism is the fact that about 10 years ago, National Social Security Fund was the size of the CIS industry.
Only 2 trillion.
Only 2 trillion. So, okay, double the size. So you can imagine how much NSF has grown over the last 10 years to in excess of 16 trillion.
Yes.
And I can tell you, I don't think that is inflation. That is actual growth.
Indeed.
So when I look at it in that perspective, and I see where the CIS industry was 10 years ago, and how much has been achieved over the last 5-6 years or so, and the efforts that as an industry we've been putting in, I'm so optimistic that we should be able to rival our regional counterparts. Of course, places like Kenya have had a head start on us, but one thing I'm so optimistic about is our speed and momentum. The environment is quite conducive for us to be able to work and see it. And by the way, some of our regional partners have had a bit of headwinds that has kind of slowed down their momentum, whilst for us we've actually been running, and we're going to continue pushing that. I think the policy structure or framework that is there right now is good and can be made better. And that's part of the work that the CMA is doing together with the Ministry of Finance. So I believe once those two, if we can do a lot more of what we are doing now in terms of financial literacy, we remove some of these barriers around the friction costs, the transaction costs of doing business.
Indeed.
And then we are likely to actually see very, very solid growth. There is the good thing is when we look at the people that we're working with at all these different nodes, for example, the Capital Markets Authority, Ministry of Finance, the NSSF, there is a union of thought. Like everyone is kind of having that clear-cut thinking around what we're trying to do. And I think at the end of the day, it's us realizing that no one is going to do this for us apart from ourselves. And yeah, we are in it right now.
Indeed. Thank you very much, Simon. Apollo Mbowa Chivirango, let's talk about what could be done to actually grow the savings culture within Uganda in comparison to our neighbors and other countries that are doing so well.
Thank you, Romeo. And just as you said, there's been a lot of financial literacy. I myself head the financial literacy unit at NSSF. We've almost all service providers have a financial literacy unit. There's been a lot of that going out, and maybe it's not enough yet, but it's
too much awareness. But you still have 500,000
yes,
members.
You see, awareness is awareness. It will come to you. The decision to act is solely yours.
For the moment right now, why have you failed to reach out to the 500,000? Let's talk about those impeding blocks.
No, actually, we have reached out. Our numbers at we have reached about 5 million people.
All right.
5 million people, that includes non-members. But the ability to convert is yours solely. You need to act as a person. And one of the things that has, as you said, has facilitated people acting is actually understanding that a rainy day can come, and COVID showed people that you could be there on the rainy day. My corporates hopefully think that they will work for life. They have not come to that realization that they will exit. Now, Romeo,
yes,
I need you to know, and let me just take this opportunity to give some awareness. Maybe I haven't even reached you yet.
Yes,
the day you entered NTV, they signed your exit. They know you are going.
Indeed.
And they started putting structures in place to make sure that when you go, you don't come back.
I see.
You don't come back asking for relief. So they put money at NSSF. They took your village, your date of birth, and they know your village where they will bury you in case you refuse and die here. Indeed. They will still take you. So
yes,
if people get to that realization and understand that they will have to leave, then they should put in place these mechanisms that should give them a safe landing.
Indeed.
A unit trust does not need you to have a lot of money. Think about the power of small numbers. Small, what you call small money is what has been collected, and NSSF prides of 17 trillion. So if you could do that on your end, and you have control, quite huge control over unit trust, you can actually you can keep adding when you add, you can remove when you want. You have huge control. And I know we are running out of time, but
indeed,
I need to let people know that losing money or making money is a habit. And you need to work on your habits. No one is going to, we are going to read so many budgets. They will never impact you. They will never affect you if you have not come to the place of realization as a person, what your habits are. What is it that, are you financially intelligent? Not just because you have a degree. Let me say this. Just because you have a degree does not buy you a place in the financial wellness club.
I hear you.
It doesn't buy a place. Otherwise, the lecturers of entrepreneurship would be the billionaires.
Indeed.
Let me rest my case.
That is Apollo Mbowa Chivirango, the Customer Financial Advisor with the National Socio-Security Fund. Let's bring in Ms. Echirapa, the Director, Legal and Board Affairs at the CMA, Capital Markets Authority. Now, Ms. Miriam, how does the absence of a well-structured fixed income market, I'm talking about treasury bills and bonds, affect the national savings and the wider economy?
It's a big issue that the CMA has been looking at for some time now.
A bond market.
In some countries, we have what we call a bond market association.
Indeed.
And these bond market associations are also self-regulatory organizations. And they have really improved the trading of bonds at the secondary market.
Indeed.
So the opportunity for Uganda is to bring together the central bank, the Ministry of Finance, the Capital Markets Authority, for us to be able to have a bond market association. Once we have this bond market association, we should see strides in the bond market space. We should see strides when it comes to corporate bonds, when it comes to treasury bills, when it comes to the liquidity for corporate bonds. So this is an initiative that is already underway, and we are engaging the Ministry of Finance on just formalizing, you know, the structures for bond markets. So it's something that I believe with time you'll be hearing more from CMA on, and I'm very happy with the progress we've made so far.
With the CMA mulling closed-ended, that is collective investment schemes, is Uganda ready for something like that? And in tandem, let's first break down what open-ended collective investment schemes are, and then they'll get to know what closed-ended collective investment schemes are.
So right now we are running the open-ended schemes. It basically means that Miriam can get her 100,000, invest it with UAP, and then when she wants to come out, she can come out. It's open. You come in and you go out. With the closed-ended funds, it's not open in that way. In other words, you can have investors. The fund is then listed on the exchange. It trades on an exchange. In some countries, I think they're the ones we call the mutual funds. Okay. Now, are we ready for it? Right now, we are preparing the framework for it. We are preparing the framework for it, because at the end of the day, with policy and legal frameworks, you be ready, because one day a market player will want to open a closed-ended fund. So I think we are moving swiftly. This framework is being considered by our board. It has been considered by market players, and we're going to put it in place so that the day someone wants to open a closed-ended fund to create more liquidity, to have it trade on the exchange, the framework is ready. So once it's ready, I believe we will get the market for it.
That is perfect. And also, I had another question, Ms. Echirapa, largely focusing on the issue of the right taxation framework that would help us realize the full benefit of the collective investment schemes. But this is in line with the recent pronouncements of the URA. So what would be the right taxation framework?
Yes. So in terms of the right taxation framework, we want to make sure that it's the people that put their money in the fund have a tax benefit at the end of the day. Right now, you have the people that put their money in the fund, then you have the fund itself, which is the corporate vehicle. Right now, the incentive, the benefit is going to the vehicle.
Right.
We want the benefit to go to the vehicle and to the investor. So we would like government to consider giving an incentive so that instead of a dividend, if you're paid a dividend, instead of you paying a tax of 15%, that tax is actually removed.
I see.
So it's one of the incentives, because people always ask what Simon asked, Funirawa. So government, give us the tax incentive so that people can save more. That would be a very good framework for CIS.
Indeed. As we wrap up this conversation, let's engage Mr. Simon Mwebaze Kusima on your last pointers to the viewer who is watching right now. It could be a viewer who has never opened a CIS account, and they are wondering how best or what kind of criteria should be followed for one to open up a CIS account. So you can break down the steps for one, you know, to actually know what they are supposed to be doing to open up a CIS account.
Okay. So the processes have been simplified. Actually, for some CIS managers, you can just dial a short code, and you can be able to sign up there and then. But it's basically, I think the starting point would be either for one to ask themselves what they hope to achieve, having, of course, interacted and gone through some of these sessions like the financial literacy. So they hope, they ask themselves, like Apple was saying, what do I hope to achieve? And that then can guide their investment habit. So once they have made a decision, made up their mind, then they can be able to contact any of the licensed CIS players. It's important that at the end of the day, someone invests through a licensed CIS player. My final parting shot is also to pick on for what Miriam has just mentioned of more incentive. Yes, I think let the government give us incentive and then allow us to see, you know, allow us time to prove them that we can be able to turn around the economy through the CIS industry.
And with that, we've come to the end of this conversation. Many thanks to my three panelists. That is Mr. Kusima Mwebaze Simon. He is the General Manager, UAP, or Mutual Financial Services. He was never alone. We also did have, that is Ms. Miriam Echirapa Musali. She is the Director, Legal and Corporate Affairs at, that is Board Affairs at the CMA Capital Markets Authority. And then lastly, we did have Mr. Apollo Mbowa Chivirango, the Customer Financial Advisor with the National Social Security Fund. Gentlemen, Lieutenant Lady, thank you so much for having made the time to speak to us on these very pertinent issues.
Thank you.
And indeed to you, the viewer, many thanks for having been with us from 11 a.m. up to now. My name is Romeo Busiku. I'll be back here at around 4 p.m. to talk about the 24th annual report of the Uganda Human Rights Commission. Look out for that. Have yourselves a blessed day for now.
Turning on